Hi everyone, welcome back. Today is going to be an important video. We're going to review the common mistakes that traders at every level make. Some traders make them more often than others. Everyone makes mistakes, okay? So if you already know all the mistakes that I'm going to mention, congratulations, I think you're already a great trader. Okay? Let's get into it, okay? So, common mistake number one, getting a second opinion, okay? Getting a second opinion about a trend or about your setup is a bad idea, is a mistake, okay? If you're maybe looking at your friend or maybe a group, if they're going in the same direction as the pair or the currency that you want to trade, like you're looking for a confirmation, that's a bad idea, okay? Every strategy is unique, okay? Some strategies work without even a trend, or the trend doesn't matter. You should not get a second opinion about your trade or your setup, okay? Don't worry. I take correlated pairs at the same time in the opposite direction. What I mean is, like, I could take a Euro USD trade, and I can take a GBP Euro trade, okay? So Euro USD and GBP Euro, okay? At the same time, both are buys. Both can win. Even if I am actually making a conflict, because how can I say the euro is going up in one pair and I say on the other pair it's going down? You understand? So that doesn't matter to me. Correlated pairs, I limit it, of course, but if you shouldn't get a second opinion. You shouldn't worry if someone else is taking the opposite trades. You can both be right or you can both be wrong, okay? Mistake number one is to get a second opinion about your trade or your setup. Do not get a second opinion. Your opinion is the only one that matters for your trades, okay? Mistake number two, thinking, okay? When you execute, you're not supposed to think, okay? I've mentioned this in the previous video. Either you see or you don't see. Either it's a match or it's not a match. People that have a strategy systematic, however, have a little bit of discretion involved. Guys, only very advanced traders can use discretion. Thinking brings opportunity for the market to control your decision making and control your trades ultimately. Okay? You are not supposed to think when you take a trade. Make sure your rules are clear so that you don't have to think or overanalyze at the time of analyzing a setup, okay? You're not supposed to think. Your strategy has to be systematic 100%, black and white rules, okay? Not open for discretion or for interpretation. No thinking when you take a trade. I am telling you how successful traders trade. They just don't make this mistake as often as most traders. We don't think when we take a trade. We see or we don't see. This helps us with our risk management. We are comfortable risking big positions. This helps us with making objective decisions, rational decisions, and we just, either we see or we don't see, we make it a match. And then we know that it's about good execution. It's not about making money or not making money, okay? Making money is a consequence of good execution. So we think about good execution, so we don't think when we take our trades, okay? I don't think when I take a setup. Don't think. Mistake number three, trying to time your gains or your recovery from drawdown or from a losing streak. Don't try to time your gains or how much percent you're going to make in a week or a month. Do not try to time it or control it, okay? Actually, the less you try to control or time your gains, the more you're going to make, okay? The market has a really weird way, the way it works. It rewards the disciplined, it rewards the patient, it rewards the people that are trying to trade well, not the people that are trying to make money. It rewards the traders, the people that are trying to trade well. Okay? Good execution again. So we do not try to time our gains. Okay? Most people try to time their gains. Do not try to time anything, okay? Or try to time your success. Unfortunately, that's not how it works. You shouldn't try to time anything, okay, guys? Just do what you gotta do. Remember, your goal is not like, if you're trying to say, okay, this month I'm gonna make 5%. That's not your goal. Your goal this month is to be consistent. That's the goal, okay? And then watch your gains. Watch, okay? So don't try to time gains or control them. Mistake number 4 is complicating a strategy. The more factors or the more indicators or the more variables you add to a strategy, the more likelihood it's going to fail, the more likely you won't know what's working or what's not. I'll say it again. The more variables or indicators or confluences you have for a strategy, the more likely it's going to break, the more likely it's going to stop working, it's not going to work, the more likely it's going to be difficult for you to understand what's working and what isn't. You should, if you want a confirmation for a bias, for a trend, it should be one rule, maybe 2, okay? You don't need 3 different things to tell you which direction the market is going at. More variables equals more mistakes, less win rate, less likely it's going to work, okay? Don't think there's a holy grail strategy where you combine a holy trinity, where you combine indicators and it's going to, like a chemistry formula, it's going to create like magic. Guys, okay? Don't complicate a strategy. My rules are so simple, I don't have many confluences, it's easy for me to know why I win or why I lost. Or it's easy for me to win or lose. Because my rules are very simple, easy, like compact, not many, like how many rules do I actually have for my trading strategy, like for my technical setup? The trend, the pattern, the entry. Those are like my 3 things that I look at. For the direction, for the trend, I look at 2 time frames. I'm not looking for a confluence on the time frames. I look at one or the other just to know which direction it's going. I use the time frames to look at my pattern, maybe 2 or 3 different time frames to look at the pattern. And then for the entry, I look at 2 or 3 different time frames. So me, it's really, I'm a time frame. Time frames is important for me. But it's a very simple strategy, guys. I do not use indicators. If I win, I know why. It's either the trend was wrong, or the pattern was wrong, or my entry was wrong. You understand? Do not complicate your strategy. If you're an ICT or SMC trader, take a part of what he teaches and work to be good at that specific part, or trade only one part of what he's talking about. Step by step, if you want, you can develop and improve, but start with the simple way, okay? Simple works very, very, very well. Very, very well. You can have very simple strategies that work extremely well. Better than complicated strategies. Guys, look at your gurus, okay? The real gurus that you see on YouTube or social media. Their strategy is probably very, very simple, okay? ICT, SMC is an exception, okay? But on price action, very simple. Mistake number 5, weak position management. I'm talking about open position management. A mistake that people have is that they don't have clearly defined rules of how they manage an open position. Or maybe you do, but you don't pay attention to those rules. You give more importance to hope and luck and gambling than your strategy. When you open a trade, most of your rationality goes out the window. At that point, your emotions are all over the place. So you should already be ready before you enter the trade to know how you're going to react in different situations, okay? Do not leave it to hope. If you need to exit. Do not hope it might work out or like luck. That is bad trading, okay? That is gambling. That is not trading. So you have to be good at managing your open position. Execution is one thing, and then there's position management. Okay, do not depend on luck or hope to get you out of situations. Okay, depend on your non-emotional, rational thinking. Okay. Try to already know what you're going to do when you're in the trade. Do not stay in the trade if you have to go out. Do not exit the trade if you don't have a logical, technical reason. If you feel like you want to get out, that's not good enough. Stay in the trade. It has to be technical reason. Remember, if you feel bad about the trade, but you followed your rules, don't worry. If the trade loses money, you did well as a trader. Okay? Another mistake that people make is that they don't take a break after a losing streak or a winning streak. Real traders know what I'm talking about. Amateur traders would think I'm crazy. If you have a bad streak, you're thinking about revenge, making it up. No, good traders are thinking about getting back their state of mind, their balance of decision making. We don't, if I have a losing streak, guys, I had 5 losses in a row. I took 2 weeks off, which is exaggerated. It's a lot. I mean, it was also like a break, a holiday, but you should at least take a few days, if not at least 1 week off after a losing streak or a winning streak. Guys, if you have a good Monday and Tuesday, like really good trading days, you should stop for the week if you had really good days at the start. That way, guys, the rest of your week is going to be amazing. No stress. You're happy. You made gains. You're not going to give back your gains. You're going to come back to the market the next week ready. You're going to be fresh. Okay? So it works both ways. Winning or losing, you should take a break to always stay fresh and sharp and not let the market hypnotize you or take control of you in any way by inducing emotions. Again, if you lose a lot, why do you want to take a break? So you don't risk making emotional decisions. Same way when you win a lot, some people might be overconfident, which will lead to bad decisions, and then you make a mistake when you're too confident. And if you're confident and you keep trading and you lose, that could really create a snowball effect that might make you lose all of those gains that you made. It's important to know when you should stop trading, okay, guys? We all love trading, but we believe in abundance. The market is always there, okay? It's not about quantity, it's about quality. Another mistake that people make is revenge trading. This has a lot to do with emotional trading, okay? Revenge trading. Revenge trading, guys. Do not revenge trade. Everyone does it. Do not revenge trade. Listen to me, do not revenge trade, okay? Do not. After you take a trade, if it's a loss, don't worry. Remember, if it was part of the plan, it's okay. If you had many losses part of the plan, review your plan, okay? Make sure you lost for the right reasons. Maybe you made a decision that you're not willing to admit or look at yet. Revenge trading, okay? No revenge trading. Emotional trading, okay? In my previous videos, I talk about how to control emotions, how to not trade emotionally. People might not understand. They say, what's emotions got to do with trading? Take it from someone who knows how to trade, okay? Don't take emotional trades. There are videos out there from me and from others that show you how to control your emotions or ignore your emotions when you trade, okay? Another common mistake is poor risk management. It's okay, obviously you shouldn't risk too high. We know that, right? You shouldn't risk too high. But I'm talking about poor risk management is when every day or every week you keep changing your risk per trade. That's not good, okay? Your risk should be the same. Let's say the first week you had a lot of wins, okay? So you decide the second week to increase your risk because you had a lot of wins. That second week might be a lot of losses, but your risk was bigger. So it doesn't really even out the wins and losses. You understand what I mean? Yes, you should change your risk if you make more money. Yes, increase it. If you make money, increase your risk. Okay, yes, I say yes. But it has to be very methodical. It should not be too often. I wouldn't change it every week, maybe every 2 weeks. I change if I'm in drawdown, I would go down like a few days or 1 week later. But no matter what, if it's just a normal week, a regular week, or I made money, I won't increase or change my risk. It should be at least 2 weeks of constant risk per trade, okay? That way the wins and losses all throughout balance out, okay? We don't look at any individual trade. That's why we're not angry if we win or lose, because we look at the bigger picture. Weekly, bi-weekly, monthly results. So it's okay if you want to change your risk based on your balance, okay? But it should be constant, and it should be the same, like not too much and not that frequent, okay? You should have good risk management, guys, okay? Keep it also consistent, your risk management, okay? The last common mistake that people make is that they stop journaling. Guys, don't ever think you finally figured out trading, okay? Even if you did, it's not like that. The market will humble you. You have to stay humble. You have to keep journaling so you stay humble. You understand? I'm not saying maybe you keep journaling so you learn more, or you make more changes. No, it's really to stay humble. That way, when you enter the trade, you know you're going to still journal. You can't do something like where you say, oh, I could leave it up to chance, or I could do something that's not in my plan, and after I didn't journal it, so I don't have the proof. I don't need to keep myself accountable. I could do what I want. I'm a great trader now. So no, guys, the market is very smart, smarter than you, smarter than everyone. It knows how to trick people that start getting too confident or too cocky, or they lose track of staying level-headed or keeping their feet on the ground. So, okay, guys, don't stop journaling. Maybe keep a simplified version of journal, or automated journaling is cool as long as you look at it, at the trades that you take after execution. So don't stop journaling, because it's a way to stay humble, okay? No matter how good you are, you keep journaling, so every trade you know that you're going to hold yourself accountable and you can't try to go outside of the plan. These are mistakes that maybe you haven't really heard of as much in other videos. These are advanced mistakes. Everyone makes them. It's about not making them as often as others. I hope this is going to help you guys. So remember, you just have to minimize making these kind of things, okay? This is going to take your fucking trading to the next level, okay? Honestly, I'm giving you gems, guys. And I hope I explained it to you in a pretty good way. So good luck with your trading journey, and if you learned something, drop a like, okay? Have a great day.